Okay, dollar's coming off its highs. And ES is making an attempt to reach into a little bit deeper in this gap right here. Okay, so there's buy side here and an imbalance there. And what I'm actually looking at, I'm looking at the dollar index on a 5-minute chart, and scrolling to a 15-minute chart and an hourly chart, and I'm monitoring, does it continuously provide feedback that it wants to keep going higher? So far it hasn't made a higher high than the high it's already produced, which is problematic for ES continuing at least near term on the downside. So we're just watching to see what we get in terms of delivery on ES. Also, if you look at the Dow Jones, Dow Futures YMH2023, it's made a lower low where ES has not done so either. So whenever we're looking at that, it gives reason to be concerned about either a consolidation or a potential short-term reversal. Many times when I'm like, say this is a day where it wasn't the Fed and I was short already. Whenever I see situations like this, like the Dow making the lower low, NASDAQ failing to make the lower low, and ES not making the lower low either, to me, I would want to take more of the position off, because it could create a retracement higher against the position I would have open. So these are all things that I weigh in the balance as price is delivering. Dollar index still hasn't had its higher high since it's formed it. So far, the high on today is 105.265. I would want to see a continuing rather higher in the dollar to get to 105.341, and in a lower level. If dollar slips lower, okay, so in other words, say the dollar starts to come back down into its rally up and trades into like 104.90, something like that, I would be watching to see this fair value gap become support and maybe run up into this area here. So it would be like this. And it's not a trade, it's just something to observe. This is what I do on days like this. I'm not pushing a button, not even in a demo. So I'd be watching for it to draw up into this area here, preferably coming back down in and touching the fair value gap here as support. Dollar slipping in here. Now, it was real time that I walked you through the idea of those lows not being confirmed. Okay, so remember I was telling you about if I was in a trade, I'd have most of my position off. And this is generally where I'd be getting stopped out. The stop would be above this high here, trailed lower if it was a day, not because we're in Fed, I'm not trading. But if it were any other day and I was short, my stop would have been trailed here because of that reluctance of seeing lower lows in ES and NASDAQ while the Dow did make the lower low. If it runs to this area here without returning to this, that would be a day, or that would be a trade that I would miss if it was any other day, because I would absolutely, if it wasn't Fed today, if it would have came down to this level here, I would have said, now watch this as a potential long to here. I wouldn't do it today, but if it was any other day, I would be taking that trade. It'd be 10 handle run. Now we have a buy side imbalance, sell side inefficiency, meaning from this candle's high and this candle's low, the one candle in the middle, all that big movement here, you're looking at this high, that low. Midpoint between these two reference points is consequent encroachment. Okay, so that's consequent encroachment. Now we have two things here as a discount. This one here is the first one. The second one is this fair value gap. I mentioned it. If it returned back to it without touching this area here, on another day, not today, I would utilize that as a long to get up to here for about a 10 handle run. We've done repriced all the way through this buy side imbalance, sell side inefficiency, and we're in the fair value gap. So watch and see if it delivers from here up to here. If you have the benefit of toggling between Dixie or DXY, do that on your 1 minute chart. You would want to see dollar index not rally. It can stay consolidated, or preferably go lower into its buy side imbalance, sell side inefficiency on its 5 minute chart candle at 10 a.m. Watch this wick. We wouldn't want to see it trade below midpoint of that consequent encroachment. It can touch the fair value gap now, but I'd rather see it not do that because it's already done it. Okay, back into that buy side imbalance, sell side inefficiency is low and fair value gap. The risk would be on this candle's low. See where the bodies are forming? The wicks can do the damage. They can trade outside the lines. The bodies of the candles, that's what I'm monitoring. I'm watching all that. Okay, dollar index has a fair value gap at the 1 minute 1021 candle. That's like the last line of defense for me because it's inside the breaker for dollar. If you look at the down close candle on 1 minute DXY, that candle being at 1012. So we can trade up into the fair value gap that's at the 1021 1 minute candle on Dixie, and inside that bearish breaker, which would be 1012's 1 minute candle. It's inside that now. So far it's giving nice feedback. Let me see it here. There's the gap. And there's the breaker. So you can see it real time. And that's 5 handles so far. So you want to screenshot that. And it hasn't even taken out the short-term high yet either. A little bit of a struggling point for dollar here. The candle's not closed yet. I'm just getting it there so I can adjust it when it does close. Oh, there it is. It's good. So my eyes on that fair value gap and bearish breaker on the dollar index on its 1 minute chart I just showed you. As long as we don't vault above that, we should have no problem. Oh, there you go. So there's the outline of a real-time trade idea. Did you need to see a button being pushed? No, but the logic is there, and if it's not there, I would fail. You wouldn't be seeing me calling it, outlining it, and delivering again. I have this consequent, it's not really a consequent encroachment, but it's the level of fib projection off of this here. And also if you measure the consequent encroachment of that civvy. Nobody's excited, nobody's surprised. You hear any animation in my voice? No. It's all old hat stuff. Same stuff over the last 3 decades. So consequent encroachment of this civvy would be this level here, but from this low to that high in dollars really has really slipped lower as we were expecting it to do. So that's probably random. So there's the breaker outline we talked about. And then inside that breaker, we have the fair value gap I was mentioning. So that's the anatomy of intermarket relationships and how we look at one thing versus the other. We cleared an important level that I mentioned before, which is the rejection block on the daily chart. That's what this dashed line is. Go back and look at old recordings, and you'll see that I've been talking about that. That's not just because today, because it's a daily chart PD array, it's important. You'll refer to it again. This down close candle between the high here and this high here. Remember, this is point 1, swing high 1, swing high 2. Between swing high 1 and 2, the low, in between, that's the bearish breaker. It's a breaker because we went below it here and have taken buy side. Then the market comes back up, trades into what? An imbalance inside of a breaker. Lower dollar means what? Risk on. Risk on means what for ES? Higher. Just random higher? No. We have to get a measurement. My eye was looking at this high to that low, midpoint in that area. First imbalance was here. There's no fair value gaps in here. So I took your attention here, and then if we got overzealous on the upside, and because of the breaker on dollar, that means using swing projections from the fib anchor to that low to that high takes us up to this level here. It may not get there. I don't care if it does. I'm not going to make anything. I'm not going to lose anything. But I'm showing you the logic. If this was a day where the Fed wasn't impacting price action, if they're not intervening, then I would be in there doing that trade that you watch me outline here. Trading what? The returns of the fair value gap here. My stop would be down there. So there you go. You would want to be taking partials here because you're inside the lower bracket of between this candle's high and the fib projection and the consequent encroachment. So you're encroaching on a real premium in the marketplace. So you want to distribute your long positions at times when the market is at premium. We don't need an overbought indicator to indicate whether we're overbought or oversold. We're looking at the range in itself. Does that make sense to you, son?
Yes, sir.
You see how it reacted down here? It went twice, but look at the body staying inside between these two blue. Let me make these lines a little bit thicker. So in between those two heavy blue lines, the bodies are telling you the narrative. That it's going to respect this imbalance and then reprice to a premium. What's the premium? Near term is this high. Then it's the imbalance here, which is a SIPI in the form of a fair value gap. Sell sign imbalance, buy sign efficiency between this candle's low, that candle's high. That little movement on that one candle, that's what I highlighted. So it went back up into that. And then we have this area in here between this midpoint of that candle's high, I'm sorry, that candle's low and that candle's high. That's what that measurement is. It's half of it. But the projection from this low up to this high just with the fib, I'm trying to build a confluence of levels to justify how far this retracement can go. When really, on a day like this, you would have the bulk of it off inside that first premium right here with that fair value gap. Does that make sense?
Yes, sir.
So this is a run from here to that high. So this level here at 40.22, just getting to this old high back here is 9.5 handles.